It made millionaires, sparked headlines, and crashed more than once. But is Bitcoin still worth your money in 2025, or has its time passed? In this video, we'll break down where Bitcoin stands now, what the data says, and whether it still deserves a place in your portfolio. Before we dive in, don't forget to like and subscribe for honest crypto analysis, market insights, and no-hype investing advice. Let's get started. 1. Bitcoin's limited supply remains intact. Bitcoin has a maximum supply cap of 21 million coins, which ensures programmed digital scarcity. Fewer new coins make Bitcoin more appealing as an asset that resists inflation over long-term holding. Scarcity creates a digital gold narrative, which drives value based on fixed supply and rising demand. As more users join, this limited availability contributes to an increased perception of long-term worth. Economic scarcity principles suggest that rare, useful, and wanted assets often retain strong valuation. In a world of monetary expansion, Bitcoin's capped structure looks increasingly appealing to investors. The supply limit continues to serve as a foundation for Bitcoin's potential appreciation through years. 2. Institutional adoption continues to rise. More institutional investors are now holding Bitcoin, changing its reputation from risky to respectable asset. Major banks, investment firms, and corporations have included Bitcoin in their long-term asset strategies. Bitcoin products are being regulated, custodied, and integrated with traditional finance infrastructures. This mainstream movement reduces volatility over time and stabilizes Bitcoin as an accepted investment. Large capital flows from institutions can lift prices while decreasing short-term speculative behaviors. Regulatory clarity makes it easier for firms to hold Bitcoin legally without fear of compliance issues. Rising institutional adoption supports the view that Bitcoin remains viable and growing in 2025. 3. Bitcoin as a hedge against inflation. Many investors turn to Bitcoin to protect wealth from the declining value of fiat currencies worldwide. This makes Bitcoin attractive to those seeking an asset that stores value through economic uncertainty. In countries facing high inflation, Bitcoin offers people a more stable alternative to protect savings. Even if Bitcoin's price fluctuates, it often outpaces inflation over medium to long-term timeframes. It appeals to individuals and institutions looking to shield themselves from currency devaluation risks. As long as inflation persists globally, Bitcoin retains strength as a defensive, inflation-resistant tool. 4. Regulatory landscape is becoming clearer in 2025. Governments are finally offering clearer regulatory frameworks for cryptocurrency use. Investors can now feel more confident in jurisdictions that support and recognize digital assets legally. Many countries are licensing custodians, exchanges, and brokers that deal with Bitcoin professionally. When governments clarify laws, institutions and banks are more likely to enter and stay in the market. Although regulation may limit some features, it strengthens long-term growth by building public trust. Increased legal certainty in 2025 enhances Bitcoin's potential as a reliable asset class. 5. Volatility is decreasing over time. Historically, Bitcoin has been extremely volatile, causing both massive gains and painful short-term losses. With broader adoption and institutional use, trading patterns resemble traditional asset behaviors more. Advanced derivatives and financial tools have given investors better ways to manage Bitcoin exposure. Volatility is a natural phase for new assets but reduces as trust, usage, and market structure increase. More accurate pricing, better analysis, and deeper markets contribute to Bitcoin's calmer behavior now. This reduction makes Bitcoin more practical for savings, loans, and general use in financial systems. 6. Technological improvements support growth. Bitcoin technology is not static. Developers continuously improve its scalability, security, and use case. Wallet interfaces, security tools, and cross-chain compatibility continue to improve user experience. Developers also enhance protocol resilience by defending against potential attacks or bugs in the code. New tools help businesses integrate Bitcoin into payment systems or treasury operations more easily. Education tools and intuitive software reduce barriers for average people to buy and hold Bitcoin today. This flexibility ensures its relevance and practicality continue into 2025 and beyond. 7. Store of value narrative is strengthening. Bitcoin is increasingly seen not just as a speculative asset but a long-term store of value worldwide. Many compare it to gold because of its scarcity, portability, and resistance to centralized manipulation. Unlike physical gold, Bitcoin is easily transferable and divisible without the need for storage logistics. People in unstable economies use Bitcoin to protect wealth from bank failures and currency collapse. Its global accessibility makes it a universal hedge regardless of country or financial system failures. 8. Scarcity creates supply pressure. Every 4 years, Bitcoin undergoes a halving event that cuts the mining reward in half permanently. This means fewer new coins enter circulation, putting upward pressure on price through limited supply. As demand rises from users, companies, and institutions, the lower supply struggles to keep up today. Even if price rises are not immediate, scarcity affects market psychology and future valuation outlook. As supply decreases, long-term holders become less likely to sell, further limiting coin availability. This increases buying pressure from newcomers or institutions seeking entry into Bitcoin investments. Bitcoin's programmed scarcity continues to influence price action and investment narratives significantly. 9. Market cycles favor long-term holding. Bitcoin has historically moved in 4-year cycles influenced by halving, demand, and overall sentiment. Each cycle includes accumulation, uptrend, blow-off top, crash, and then long-term recovery afterward. Investors who bought and held through multiple cycles often saw exponential returns on their positions. Timing markets is hard, but history shows patient holders tend to outperform short-term active traders. Even after large crashes, Bitcoin has always recovered stronger in the following long-term bull cycles. Understanding this rhythm allows for better decision-making rather than reacting to daily price moves. Long-term holding continues to be a strong strategy for those who believe in Bitcoin's future value. 10. Risks still exist but can be managed. Despite all strengths, Bitcoin is not without risk. It remains subject to regulation, theft, or hacking. Government bans, tax law changes, or technology flaws can impact Bitcoin's stability or accessibility. Beginners may panic during volatility, leading to losses from poor decisions without risk management. Cybersecurity failures, phishing attacks, or exchange collapses still pose danger to careless investors. Only invest what you can afford to lose and prepare for wide price fluctuations over short timeframes. Bitcoin is not risk-free, but with proper care, its benefits can outweigh the manageable uncertainties. The truth is that Bitcoin remains a good investment if you enter prepared, informed, and with patience. Some see risk, others see long-term value. What's your take? Still bullish on Bitcoin or looking elsewhere in 2025? Let me know in the comments. And if this video gave you clarity on where Bitcoin stands today, don't forget to like and subscribe for more grounded insights, smart investing tips, and up-to-date crypto strategies. More coming soon.